Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX rundown. The dollar index is recovering from yesterday's lows. Couldn't get any follow through overnight and into the today. Now you have the Swiss National Bank this morning. They dovish, leaving rates unchanged in the negative territory. You got the Bank of England, also fairly dovish. I mean, they're leaving things unchanged, but really exuding that patience that we hear from the Fed as uncertainties loom in this Brexit crisis. A lot of uncertainties there. The Fed is dovish yesterday, but the dollar couldn't follow through. Everyone else is dovish too. You're seeing the pound down nearly 2 pennies today. This dragged on the euro, so that also lifted the dollar index. So the dollar index is back at a crucial level here, 96. It's a big battleground. Same way in the flip side, you got the euro, 114.25. This heads into tomorrow. We got flash PMIs, eurozone and regionally earlier, and then the U.S. and the morning here in the U.S. hours. Keep an eye on these. These are going to set a tone from that 96 level in the dollar index. But don't be quick to be buying this dip in the euro until you get a little more certainty. This is quite the reversal. You don't want to step in front of it. Same thing with the dollar index. See how tomorrow plays out and where we close on a weekly basis. Moving on to the yen, it did move up higher yesterday with all the safe havens, but all three major safe havens have fallen back. The Treasury complex, gold, and the yen. Now that strengthening dollar had put some pressure on the yen, but the yen also had a major three-star resistance overhead, did not quite get there. And then it's fallen back. So what you want to look at now is that 90 level. 90 is going to be the continuous 200-day moving average. And we like to think that the yen is constructive above that level. So keep an eye on that. You have inflation data, CPIs coming out of Japan later this evening. So watch for that. And now with the Aussie dollar, we like fading this move. We think it's going to go lower. It's already off the highs here in the session and moved up with that overall risk sentiment, stocks higher, as well as commodity prices. Copper near 297 overnight. They have all copper faded, but stocks certainly have not. And the Aussie though is seeing some weakness following some commodity prices. Crude's off the highs as well. The dollar index higher, the dollar broadly higher, putting pressure on the Aussie. So the Aussie, the employment data last night was not anything really great. It came in below expectations. So I think you're starting to see some of that trickle into the Aussie as well. You have manufacturing data here this evening. Keep an eye on it. But ultimately, this, despite moving higher, could not close out above major three-star resistance. We like being short the Aussie. We think there's downside potential there, so keep an eye on that. And then as well, we like being short the Canadian dollar. Canadian, quite a reversal there. Tomorrow, though, keep an eye on it. You have CPI data out of Canada. It's going to be crucial. There is nothing more fickle than the data out of Canada. You get some good hits, and then you get some really big misses. Keep an eye on CPI. If that misses, we could finish very, very poorly in the Canadian dollar ahead of the weekend. Crude oil also battling at that $60. If it comes off its highs and that CPI misses, again, we could see that Canadian dollar sharply lower tomorrow. Give us a call, though. We're here to help talk about anything on the board, help you with risk management, currencies, or other markets as well. Give us a call, 312-278-0500. You can email us info@bluelinefutures.com. Again, that's 312-278-0500. And that's info@bluelinefutures.com. Check our website for updates as well. We can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thank you.